Welcome back to the podcast. This episode, we are joined by Mr. Jodi Anhorn, CEO of GLJ, a global energy and petroleum evaluations firm based in Calgary, Alberta, Canada. This podcast episode is powered by ATB Capital Markets. ATB Capital Markets provides financial solutions and strategic advisory services to help businesses thrive. With a track record of successful deal execution, ATB is a full-service investment dealer with a deep understanding and commitment to the industries it serves. Visit atbcapitalmarkets.com for more information. This podcast episode is brought to you by EPAC, the Explorers and Producers Association of Canada. Okay, well, good morning, Mr. Jodi Anhorn. Thank you very much for doing this. I really appreciate your time.
You're very welcome. I appreciate the invitation. A little bit humbled. You've had some great speakers in the past.
Well, thanks for listening to the podcast. I appreciate it. For the listener, you are the CEO of GLJ Petroleum Consultants. But what is GLJ Petroleum Consultants, or GLJ for short?
Yeah, we are an energy consulting firm. We're based here out of Calgary. I do a lot of work here in Western Canada, but also apply our wares internationally as well too. Largely based in subsurface type evaluations. Simply put, we try to work with our clients, help them sort of maximize their opportunities, reduce some of their risks, and maybe, access the capital markets through the work we do.
I thought for the purposes of today's conversation, we could structure it on how you got into energy and GLJ and a little bit about how GLJ works, and then get your thoughts on current events.
Yeah, happy with that agenda. Sounds good.
To go back to the start, how did you get into the energy business?
Yeah, I'm probably fairly typical in that I was the type of student coming up, really good in maths and sciences, really interested in how the world worked, and got into engineering largely through influences on that behalf, but also just some friends. I had some friends that had folks that were in the engineering world, oil and gas world, and so I was intrigued by that, right? Got into chemical, petroleum engineering here at University of Calgary. Did my undergrad here, did a grad school here, partly just because the market when I graduated in around 1990 was pretty quiet still. And so grad school was a good place to, spend a couple years, get a little more credentials behind myself. Graduated in 92, started here in the spring of 93. So I'm 30 plus years with GLJ.
That's rare. Usually nowadays it's rare to spend your whole career at one company.
Right. It is, yeah. And even then it was a little bit rare, but I'd say a little more common maybe then, but certainly in that time frame since now and then, that's changed a lot. A lot of people move jobs for either opportunity or interest levels and things like that. So yeah, I think I've considered myself quite lucky. I got placed into doing some international evaluation work pretty early in my career, which really just fascinated me, looking at oil and gas reserves, in other parts of the world, having to learn a deep dive into the economics of different jurisdictions, royalty, taxations, production sharing. It all really intrigued me. So that's sort of one of the interesting things, I think, in the work we do as a reserves evaluator at our core, which is really what GLJ does in our core, is you have a real tie between the technical world, the production, the well optimization, and the financial community. Why does money get spent in these areas, helping companies do acquisitions, divestitures. It's challenging, which is great when you're young and you think you know everything. I like the kid that, confidence is that feeling you have before you fully understand the problem. And we all go through that, right? I had some teenage boys who knew everything until they started hitting university and realized the more you learn, the more you don't know. So I went through that myself, obviously. I think we all do.
Mm-hmm.
And I was, fascinated by that. It was a great way to learn in the industry by working on live projects with clients. So I just grew up doing that and enjoyed it very much.
Was your goal to get into evaluations and that side of the business when you were young, or did you kind of just stumble upon the career?
A little bit of a stumble. I think I knew I wanted to work in the industry, perhaps more like what we consider like a typical exploitation type role, right? How do you maximize the value of assets for your company? But kind of stumbled into this and then realized, I think pretty quickly, that I could do very much similar parts of those roles, but then have the ability to work with another client a different month on different assets and kind of go through that process of learning what's new about that asset and how do you optimize that asset. So it's a bit of a trade-off. You never learn to all the nuts and bolts in the field you would maybe as a exploitation type, but you also have a broad base of, experience thrown at you, I guess, that you have to get your head around.
And did you ever think about leaving JLJ? Was it ever consideration, or did you look around? Or
Oh,
fortunate?
it happens for sure. It happens, right? I think I'd be kidding myself if it doesn't, especially through some of the really hectic, racy years that we've had in Calgary, right? When the economy's hot, good quality engineers, have opportunities thrown at them, really, to be perfectly honest. And so, I thought about it absolutely and kind of weighed the pros and cons of going and staying. But it happens, I think, certainly in every, professional's career in terms of what can you learn by staying versus, going to a new role and taking on new challenges. So, it for sure it crosses your mind many times, but, I really don't regret staying simply because of the, new experiences and challenges that come with it.
And it worked out. You ended up as CEO.
It worked out. Yes, it did. Again, it's probably fair to say I'm a little farther from my calculator now than I used to be, right? I don't get in and look at the well tests and do the, RTA type analysis I used to, but new challenges every day. Certainly you move up more in running the business, helping manage people, hiring specific teams, making a little bit more strategic decisions along the way. So it's a good trade-off.
Originally, are you from Calgary? Did you recognize the opportunity? Did you know?
I'm a Calgary kid. I grew up in Calgary. No, I think, again, probably learned more about it just by getting into the industry and being exposed to these elements. Didn't have a grand plan about what specifically I wanted to do, other than I knew it was obviously a great industry with its arms in lots of different areas, right? Whether you stayed in Calgary or not. So that intrigued me.
So your first day at GLJ would have been the 90s? Do you remember your first day?
Yeah, I do. April Fool's Day, 1993. There's another fellow I work with here, Leonard, started on the same day with me. So we're both in since April Fool's Day, 93.
Were you intimidated?
Oh, for sure. Yeah, I wish I had video cameras back in those days, right? Because I'm sure I, squeaky clean, probably showed up carrying a bag or a briefcase with nothing in it, but wanted to look the part, right? There's a little bit of that fake it till you make it, right? When you're new out of school. So I definitely had a bit of intimidation around me. A lot to learn is what I knew at that time.
And so you started learning, and what were your first jobs at the company? Doing reservoir analysis? How does that work?
Yeah, primarily. Coming through engineering, I certainly knew a lot about the theory and, the how you could employ some of the textbook type examples you work on. But, as soon as you start working in the real world, it's never as simple as the textbooks make it. So that's, I think, your first exposure is trying to sort through, how do you make sense of all this data and information that comes at you and do a good job of making sense of it all, right? A bit of a problem solver is the way I like to put it here. You do analysis 3 different ways. Usually you'll give you 3 different answers. So how do you make heads or tails of that, right? What do you trust? What you don't trust? Those sorts of things. So that was early on in my career. And I do recall also the first few years being real cognizant of wanting to learn more about the rocks and the geology. I don't think I learned enough about that in school. And so that was something I really tried to chase. My first few years of training and industry experience was, what is the rock we're dealing with? It's not obviously the fluids and the pressures only. It's, how did the rocks get here? How are they deposited? What's the petroleum system? Those sorts of things.
So were you working in Calgary the whole time, or did you move overseas?
No, worked in Calgary the whole time. Interesting projects early. There were some within the first 5 or 10 years. I remember there was one example where I spent, call it 2 weeks in London. There was a Canadian-based company, publicly listed, who wanted to merge with a private co out of the UK. So they needed a rationalization of their assets. So they hired GLJ, and I got put on the file to go work the data rooms for a couple of weeks, look at all the assets in the fields, and come up with a relative valuation between these 2 companies. And that really fascinated me. That was a project I'll remember forever because I kind of got thrown into it a little bit with, a geologist and a geophysicist from Calgary. But we were over there for 2 weeks, and then we must have worked on the project for another, 2 months, let's call it, after we came back with all the data. But it was just a real good example of a project that challenged me, right? And it gave me the feeling going into it like, oh boy, can I do this? And coming out of it feeling pretty comfortable that, this is a really interesting field to work in, and I think I can get my head around it.
Did you ever end up in the States, or was it all Canadian based?
Yeah, we're based only out of Calgary. We actually, it's interesting. So the reserve space, reserves and resources, which is still the base core of what GLJ does, might be 2/3 of our work. There's a well-serviced market for that in the U.S. already, I would say, right? Good competition, slightly different business model than the way we do things. We do pretty full evaluations when we review them, and they do more of an audit approach. So it's a market that we've really just never tried to jump into intentionally. But that's not the case elsewhere. Like in the UK and Australia, Latin America, it's done a little bit more like it is here in out of Calgary in the Canadian realms. And so those are areas we tend to work in more than the United States.
So fast forward to nowadays. Speaking of competition, there are other petroleum evaluators in Calgary that do a good job, like McDaniel. What do you think separates or makes GLJ a little different than everybody else?
Yeah, it's a good question. And yeah, we've got at least two kind of key competitors in our space, right? There's kind of what you might call the big three here. And I have all the respect in the world for them. I think they're good competitors for sure. You mentioned McDaniels. I know them quite well. Good people. We each have our sort of niche, I would say, in how we approach things. What tries to set GLJ apart, I think, is we really do deep dive on the technical work, especially in the last 10 years. We've built out a very capable team on integrated studies, field development planning, geomodels, simulation work, all that really deep dive stuff. And again, that was intentional by us about 10 years ago. We saw a lot of our clients and E&P in general start to de-staff, right? Shrink some of those technical groups that they used to keep and fund. And so there was a need for it in the industry. And so we've really dove back into embracing the technical side on that stuff. So that sets us apart a little bit, I would say, as well. We also do, because of that group, we do a lot of work into carbon management, CCUS space. We've built a full team on geothermal applications, which again is based in subsurface skills and expertise, but really focused around geothermal extraction of hot water and in many cases lithium from brine as well. Again, all subsurface skills, but just kind of repurposed a little bit. So that's a little bit unique for us. And we have a small team as well, too, that helps our clients on sustainability and emissions management issues. It's something obviously that had a real hard push for a number of years. And now change of environment, change of government in the U.S. may put a pause or at least some headwinds on them. But what you see is probably no different than what I do. Most E&P companies are very aware of their footprint in the environment and try to do a really good job with development. And so they don't all have large sustainability teams. So again, we try to be there to help our clients kind of solve their problems. So that's a team we've built up as well too.
And like McDaniel, GLJ is employee owned. So you could say that you eat your own cooking. Your incentives are aligned.
We do. That's an important part for us. And I think you do see a change in your staff when they're treated more like an owner of the company than just an employee of the company. Everybody cares. They ask good questions, right? Well, why are we doing that? Is this the right area to move into? How much do we spend on coffee every month? It's funny how it kind of changes the mindset of people, but it's healthy. It's healthy conversations, and you get staff who are really motivated for a company's success. So yeah, like you said, your incentives get aligned pretty quickly.
Also willing to do podcasts like this. Sometimes there are clues on the willingness of leadership to put themselves out there.
That's right. Ultimately, I report to our shareholder group, right? They're my boss as much as I'm their boss. So it creates a healthy environment, I think. With that said, too, I've got a really strong executive team with me here. Chad Lemke, Tracy Bellingham, Alan Withy, great team. Lots of strong VPs who help run the company. And so we got a really good chain of command to get work done. I consider myself lucky for that. We've done a good job of building that team.
And for the listener, who is GLJ?
Good question. Yeah. So you see on the wall behind us, there's a sort of a bit of a historical plaque. So the G, the L, and the J are Gilbert, Lautzen, Young. So we have historically had the naming process as a law firm would. Every time a principal would retire, we get a new principal, we would rename the firm. So that started back in 1970s. Tough to do that when your brand is your name recognition a little bit. So we kind of clued into that in the 90s. We were called Gilbert, Lautzen, Young for quite a while, which is a mouthful. Everyone called us GLJ anyways. So when the G, the L, and the J retired, we kept it. We just kept that as the name going forward. So
long story short, they were the three founders originally.
Not originally. They were the three principals when we adopted the permanent name.
Okay.
Originally, it was just a single individual. Gary Last started us back in the early 1970s. And it grew into Last. There's Nikiforuk Pinnell, Coles Nikiforuk Pinnell, Coles Gilbert, and then Gilbert, Lautzen, Young. And so that they got immortalized as the last name change.
What do you think the company's done right to last? It's rare for a business to stick around for 50 years.
That's a great question. And we feel the cycles just like the E&P companies do, right? When there's investment in E&P, new companies are being born, companies are merging, lots of A&D, lots of growth resources, right? There's just, the typical churn in the industry. And we feed off that as well, too, just as accountants and lawyers and whatnot do. So, in good times, it's easy to grow. It's tougher, obviously, when the economy's down and clients and E&P companies aren't drilling with as much activity. So it's important that I think you remain nimble, right? We serve our clients. There's no question about it. We're sort of a service company in that mentality. So we try to work with them in areas where we can help them solve problems. So if they need to access capital, maybe it's a reserve report, resource report, competent person style report. If it's technical support they need because they don't have that skill set, we want to be able to meet them there and provide the technical work that helps them, optimize their assets. If it's sustainability, emissions management, we can help them with those sorts of things too. So it's trying to be as nimble as possible to really just service our clients in a cost-effective and technically capable manner.
Despite investor apathy towards Canadian energy, it is still a relatively efficient market and it's hard to find good assets. There's a lot of eyes on the board, so to speak. So in your experience, what has been the best catalyst to finding good assets since you look at a lot?
The industry continually impresses me with its ability to sort of reinvent itself, right? I was certainly, as I mentioned, the time frame, been around a while, lived through sub $10 oil, sub $1 gas, but I shouldn't say that that's that unique. We go through that, it seems like, too often here in Canada. But the industry is very resilient, and the ability to, like I said, reinvent itself is very impressive. So some of that's obviously on the back of technical skills. Earlier on, it was capable exploration teams who could develop new key exploration targets, find them, develop them. And then that really morphed for the last 15 years. It's largely been resource-style plays, obviously, on the backs of horizontal wells, multi-stage fracs has been a real game changer for all of North America. And so, I don't have a great reason for why the Canadian industry is a little bit overlooked. It's a bit of a hidden gem, really, in my mind. I think they are as capable and competent as anybody in North America for developing these plays. And a simple play like the Montney, for example, is absolute world class, right? The economics of development in those plays are as good as anything we see in any other play. So you would think, the combination of the resource and the talent should be valued the same, but it really hasn't been the last few years, right? It's a little bit overlooked. I think it is changing. Certainly I'm in touch with a lot of clients and they do see international interest again, I'd say, in Canadian resources. Perhaps it's as simple as politics, right? I'm not one who likes to point the blame, but there's no question we had a government for 10 years who provided a headwind against us, right? They just were it wasn't even just oil and gas. It was resource development in general. I would say they were a little bit skewed against, and maybe that's changing, right? Maybe they see, the pulse of Canada coming back a little bit on that. And that's healthy because I think that, you start to get a little bit more interest. Maybe the capital development happens and we will get some of these projects developed that have been on hold for a little bit too long. Like you've had many speakers come on and talk about, how we missed the first phase of LNG development. And that's very true, right? We have lots of opportunities there, very similar to the Gulf Coast, and they monetized theirs. And we're just at the brink now of monetizing our first one. I just read the article this morning that, we might see first gas in July come off the LNG Canada, which is a great yardstick for us to measure ourselves again. And, hopefully phase 2 will happen there. There's certainly other developments coming, the wood fibers, the cedar, others in play down the road that I do honestly think we'll see the light of day. They just make sense on so many fronts that it'll come to fruition at some point.
If and when U.S. shale starts to tire out, U.S. investors will start to look north again for inventory and equities.
I think that's part of what we're seeing. There's no doubt about it. Like, don't get me wrong, the Permian's obviously the elephant in the room whenever you talk about it. But they do get tired. There's no doubt about it. That could be 5 years, could be 10 years. When the majors themselves are talking about it now already, that they see a plateau coming, I think we should take notice of that because they're sort of telling the market that this can't keep giving forever. You can't grow from 10 to 12 to 14 million barrels a day in the U.S. and keep it going. It will run out at some point. And so they will become resource hungry again. They'll go looking in the market for that. And there's been some really good presentations. Presentation from Mike Rose of Tourmaline at the SPE's conference in March talked about that, right? Where they'd done some work and they saw the value of the sticks on a map. They were $5 to $10 million down in the U.S. and they might only be 1 to 3 still up here in Canada. Well, that won't last forever, right? Companies are too smart and too good at moving capital around for that to happen forever. So they'll start knocking on the doors again. I don't doubt that at all.
Are there any clues you've seen or learned to recognize on plays or resources through the years that you've found to help see new reservoirs coming along?
Yeah, like I said, companies impress me. Their eyes are pretty good in terms of knowing the basins they work and finding and redeveloping fields that maybe were bypassed or maybe marginal early on. We laugh about that at times about, the Montney being discovered, quote unquote. Drilled through it for years, right? Lots of companies were chasing the halfway and other zones that were right in the middle of the Montney Fairway. And of course, technology was the game changer there. People used to drill just the little sweet spots of the Montney where you could make it commercial, say pre-2000. But come early 2000s and on, obviously it's become the main chaser. So, just looking for those licensing trends is obviously a tell. People aren't going to be looking at licensing lands if they don't believe there's some prospectivity there. Not that it's a 100% indicator. There's certainly false positives on that front too. But to me, it's technology, and technology really is just a driver of economics, is what it is, right? The ability to drill those wells economically was a game changer. We're seeing it again now. I would suggest in the shallower oil plays like the Clearwater. Clearwater has been a bit of a home run with monetizing horizons that we've known have existed for a while, but either the oil quality or the ability to drill wells into them was just a little too expensive. But with multilaterals, cost has come down, economics make sense, and all of a sudden you've unlocked this massive resource again that we've known about, but didn't pay attention to it because we had bigger fish to chase for a little while. But that's another good example, and that success in the Clearwater could be replicated anywhere else across eastern Alberta through the Mannville Stack. We're seeing it, repeating time and time again there. And that's a very exportable technology. And that's something that I think that Canada does very well and could probably do even more in the future, is to export that type of technology to different parts of the world and make some plays there economic that haven't been chased in the past.
Do you remember seeing some of that technology come up? And do you like a random presentation and obscure?
Oh, yeah.
Conference?
I laugh about it. Maybe I shouldn't laugh about it this week because of what's going on in Tehran, but we were in Tehran in 2000. I recall us putting a session on talking about horizontal wells. This was pre-multi-stage horizontal wells. This was just the drilling of horizontal wells to access, incremental meterage in these formations, because we were doing it here successfully in a number of plays. And there was a big desire for, some international groups to learn more about it, try to apply it to their fields. This was September 2000. Now, of course, September 2001, the world changed and we haven't been back since. But that's an example of where, we tried to kind of get out in front of it, build some partnerships, export technology. We were working with some drilling companies here in Alberta, field service providers who, would have been very up to task to drilling those reservoirs internationally then. So that sort of thing is what I'm talking about there for sure.
Never know when you're going to uncover something at a obscure conference or operator out in the field, maybe.
Yeah, it's exactly right. And so, and I think that we do see that already with, what we kind of call unconventionals now. It's funny we still call them that, but because it's really where 80% of our capital's gone in the last 10 to 15 years. But unconventional reservoirs exist worldwide, of course, but it's just a perfect confluence of, the rock and the existing infrastructure in North America that's made it so successful here. It will likely happen in other places. There's some exciting unconventionals being drilled in the northern territories of Australia as we speak, right? The Beetaloo Basin. There's a couple U.S. companies drilling some pretty exciting unconventional plays down there. They're very expensive. That's where it starts because there's no existing infrastructure. But ultimately, if it can help crack the nut, crack the rock, if you will, could solve a national energy crisis that they have kind of created there in the country. So it's a good example again.
This podcast episode is sponsored by Conate Water Solutions. Do you need cost-effective water sourcing options to supply your next drilling or completions program? Conate Water Solutions is a specialized hydrogeology company focused on water well drilling, testing, and water management services in Western Canada and Texas. Contact info@konewater.com or check out konewater.com for more details. Most high-quality E&P companies have their own reservoir teams that can run the analysis, come up with standardized reserve analysis, and the numbers are in front of you. But how does GLJ provide a creative opinion on things to provide value for your clients?
Yeah, good questions. And you're exactly right. Lots of E&P companies have terrific exploitation type teams that understand their plays, and we learn a lot from working with them. Our goal obviously is to provide some novel analysis, some data analytics work, some machine learning tools to provide just as much insight back to them as we get from working with them. And so that's our goal. That's what we do spend a lot of our time on, for sure, is looking at that sort of advanced analysis on the data side to provide some insights back to our clients as well. It's a good relationship, right? This is a relationship business, just like most are. And, we really look to provide value back to them in that front. If all we do is just an independent reserve report and publish, I think we've missed something, because there should be more to it than that. If we're going to do deep dive into the operations and the economics of the operations, there should be learning back for our clients as well, too. So we spend a lot of time with them to do exactly that.
Between seismic surveys, well logging, core samples, petrophysical analysis, all the other tools in the toolkit, is there one method that you've seen produce the best or complete reserve analysis through the years?
It's like picking your children. You're not supposed to have a favorite. Honestly, it honestly is a combination of all of those. I don't think there's a single silver bullet in any one of those that solve the problem. We're talking about unconventional. So if I stay on that theme, at the first few years, everyone started drilling these wells. It was only about, drilling the well and fracking the well. And everyone thought they understood it, right? In the first few years. It was expensive, but we could do it. You don't need geology anymore. I probably heard that from a couple clients that we worked with. And I don't think things could be farther from the truth as it plays out, right? The rock and the quality of the rock and the makeup of the rock, the mineralogy, is just as important, if not more important now, because optimizing that frac has become a bit of the name of the game, right? We've gone from just doing one or two or three to, dozens, in some cases hundreds, which might have been too many. So you start to scale things back. It's finding that optimum spend of capital, and, technologies like extreme limited entry, just so that you get the frac where you want it. It optimizes it. That is a true combination of rock mechanics, seismic interpretation, like looking at where some of the hotspot trend mapping might be, and then back to good old, mechanical type engineering type things. So it is a true marriage, I would say, of all of those, which it's good for sure, and it employs a lot of people because it's the size of the prize is quite large, and getting that optimum balance is very important. We've seen lots of that, probably more examples in the U.S., but we've had some here in Canada where, everyone thought just more is more. That doesn't mean more is better, because they certainly overcapitalized some areas and probably, left some resources in the ground because they were too aggressive on how they drilled and stimulated some things. So finding that balance is critical. And that balance changes because it's fed a little bit by commodity prices, right? In a lower commodity price environment, you want to spend a little less to get what you can. Higher price, you're maybe more comfortable to spend a little more just to get those extra few, points of recovery factor from a play. So that changes with time.
Increasing the recovery factor in an old play is a great way to provide value to your company and make money. As technology gets better, do you foresee a lot of that coming up in old plays, that there's still a lot of oil and gas in them?
I do. And I'm a little biased on this because I really like the concepts of enhanced oil recovery. I think, the fact that even some of these plays we're talking about, the fact that you get in, you produce some primary production. If you do a good job, you might get 10% of it in some of these tight rocks, which sounds astounding to people from the outside who picture a big big pool of fluids down there that we just put a straw into. The fact that our recovery factors are pretty low is something that I know we will do a better job with over time. I don't doubt that at all. Water floods are pretty typical in oil fields. The question, of course, is economics, right? If it's easier to drill some new primary wells and maximize those, then that's what will happen first. But over time, as we become resource limited and maybe the economics dictate it, certainly enhanced oil recovery will become a bit of a bigger thing. And I'm a big believer. I've worked on CO2 floods since the mid-90s, looked at some here in central Alberta back in those days that are still operational. Then, of course, big Weyburn floods in Saskatchewan. It's a great use of a CO2 resource to inject in the ground and, produce incremental oil. Firm believer that will become more established with time too. I think the Alberta government was pretty prescient with producing the Quest facility and the Alberta Carbon Trunk Line back in the 2010s. So we have this terrific CO2 trunk line, which was built to support EOR type development through Alberta. And we've really only scratched the surface of that so far. Like it's only about 10% used to date, partly because the capture side of CO2 is expensive. So you really have to incentivize people to want to build a capture facility for CO2. But once you got it in a pipeline, it's a great use of that CO2 is in EOR floods through a bulk of Alberta, where we've got some floods that are just waiting to happen.
Without giving away your secrets, do you have any plays in mind that you think might be good candidates for enhanced recovery?
I don't mind reiterating many of them. It's not going to be a surprise to most, I think, of the listeners here. Any fields that have made a good water flood will make a good CO2 flood. There's no question around that. If you've been given the porosity and the permeability, you use it. The bigger trick will be, can we use that type of technology in some of these more unconventional fields, right? Where our gas recoveries might be pretty good, but maybe some of the liquid recoveries aren't as good because it's just too tight. Can we go back in there and give it some sort of pressure support, right? Whether that's CO2, or maybe it's nat gas. We know the technology works. It's just a question of economics, right? How do you make it work in an environment? So maybe there's some tweaks to the systems that will, unleash that. But there's a large resource there waiting for this to be cracked, worked out.
And so the critic would say the same company that pays you to do the reserves are the ones you're producing the reports for, which directly impact stock prices and valuation of the company. What would your response be to that?
Well, it's true. Our client hires us to provide an independent opinion, and that's the key word there, right? If a company like GLJ doesn't do a good job of looking at the hard data and providing a true independent analysis, I don't think you'd be in business long, right? That one client would pat you on the back and thank you, but you'd have 100 others who would see what's happening and you wouldn't be in business long. So it's key that we retain our independence. Now, of course, that doesn't mean, we don't have great relationships with our clients. We do. They live and breathe these assets and they know them better than we probably ever will. And so we have to get in there and work with them. What have they drilled? Why have they drilled it? Show us your mapping. We work with them to understand those things. But at the end of the day, it has to be an independent opinion from us when we publish it, or else it just wouldn't be a going concern. And it does create tension at times, no doubt about it, right? We've had clients who we've had to fire, and maybe they've had to fire us somewhere along the way because you just can't see eye to eye. But that's pretty rare, to be honest with you. I think most of the clients we deal with are very technically savvy, and that's obviously where we want to be as well. And so you have, strong technical meetings. You overcome differences through interpretation and data. But at the end of the day, it is an uncertain estimate that you're putting out there. So some recognition of that, I think, is valid on both sides. You're doing your best guess to give a high case, high certainty case, a probable case, and then a less likely case that investors can rely upon.
At the end of the day, you're searching for hydrocarbons thousands of meters below the Earth's surface, so there can be some variability.
That's exactly right. You're dealing with nature. This isn't a simple manufacturing process. We kid about it at times being that, but that's really not what it is. You are dealing with nature out there, and there's inherent uncertainty in that, without a doubt. But I think if you do a good job of even providing that level of understanding and disclosure to your client, ultimately those clients are reporting to their shareholders with your reports. So, if there's areas that are more risky or more uncertain, come out with it. Like be out front with that. Shareholders appreciate that, right? There are some who look for those riskier plays that might have a larger return. It's not always negative, but you're better to be transparent about that sort of understanding in the analysis side.
Which ties into the fine line between speculation and investment. One of your main products is the pricing forecast spreadsheets or analysis that you do. How do you balance the line between speculation and concrete analysis on something like oil prices?
Yeah, it's a good question. I never really thought about it that way. So our analysis on the, let's call it the technical side, when we try to determine how large is a field, how much capital will it take to develop it, what sort of production forecast comes from it, that, I'd call that more of a hard science in terms of how we interpret it and build reports on the backs of that. Ultimately, that gives you product forecasts, not cash flows. Cash flows obviously get married with these commodity price forecasts. And, our commodity price forecasts are as good as anyone else's, which means not vary at times, right? We published an April 1st, 2025 price deck. What day was Trump's Liberation Day? I think it was April 2nd, 2025. And the markets went, in a roller coaster ride. So price forecasts are a necessary evil, right? We have to have some opinion on what the commodity price is going to be 10 years from now. But it is an extremely obscure lens you're looking through, right?
Yeah.
In the near term, we lean a lot on futures pricing, like most analysts would, right? What is the market actually putting dollars on in terms of near-term commodity price forecast? That's the best indicator you have. That's companies putting real money into futures pricing in 2 months or 3 months. That becomes a lot more murky out 12 or 24 months because the contracts aren't as large, the volumes aren't as big. And so at some point in time, GLJ starts to rely more on what we truly believe supply and demand to look like. So there's near-term factors that affect the market, and we see supply and demand ultimately dictating what these commodities are going to be. So even in a case when, things went quite south on Liberation Day, prices were back into the, I think, $50 for WTI, high $50 for WTI. We still believe long-term prices are in the 70s, right? Don't remember exactly what it might be, 72 or 74 USD for WTI. And that wouldn't change even with near-term volatility, right? A lot of politics and a lot of near-term things happen. So our price forecasts will look a little bit like we've got two endpoints quite often, near-term and end-term, and then a little bit of a tie between them in terms of how we get from point A to point B. So there's just a lot of uncertainty in the near term, and long-term things change, obviously, as well. But those tend to be a little bit slower moving, right? What do we really see the demand for commodities looking like, and then how can industry supply them? Natural gas, we're strong believers in natural gas as being a really strong fuel for now and in the future, but that doesn't mean you don't have near-term oversupply, which is really what the Canadian basin is dealing with right now, right? The $1 AECO makes no sense in the grand picture, but in the near term, it probably does because storage is relatively full and we're not off-taking elsewhere yet.
Have you found it helpful or useful to look at short-term storage reports, long-term storage reports? A lot of people point to those in terms of supply and demand, but then it turns out to be wrong and the pricing is off even then. Through the years, have you found that to be? Where do you look?
Yeah, I think we're very similar to that. We obviously look at those. We do a lot of research. We've got a team of a couple people who spend a lot of time looking at the energy commodity markets and trying to understand them. And those are key indicators, no question. Again, I would suggest most of those are, if you're speaking storage in particular, most of those are near-term drivers of commodities in the next few months. And we do use them. Of course we do. They correlate pretty well to near-term prices, but they're not perfect. There's, they miss the game as well too. Politics happen, right? And they have a big factor on that, as we see. Unfortunately, conflict has, near-term premiums or penalties put on them. And most of those things you just don't see coming, or if you do, you just don't know when. I forget who it was, but there was a economist who said that at one point. He says, give a price or give a date, but never give both because you'll be wrong. And it's true. That's the way it works. But yeah, we do a lot of reading on those factors too. And again, the part I think where GLJ really has a bit of an edge is we are very close to the resource side, so the supply side. We see where money's going. We see what it takes to develop a well in the Montney and the Permian and those wells in the Beetaloo Basin in Australia. And we know, long term, $50 oil just doesn't cut it, right? $60 oil probably doesn't cut it. You need substantial impetus from the commodity market to encourage that type of drilling. And so otherwise it will dry up. And so that's the side I think we bring a little bit more insight into. Demand obviously can be very fickle and influenced by many other factors.
It's a pretty small community, Canadian Energy, and even in the States, and everyone kind of reads the same data. How do you maintain an independent analysis in that environment so that you're not just thinking what everybody else thinks?
It's a good question, and I'll play a little bit of the counterpoint to that. reading what other people think is an important part of it because you yourself can't see it all. So taking in, what Bank X says, what Bank Y says, and what does the bank in the US say, that's an important part of the research we do. I think what's important is you just don't parrot necessarily what they're saying. Like give it some independent thought and make sure it makes sense to you as well. And if it does, well, then that's probably a good data point, right? Their opinions are strong. Some of the banks do a good job of surveying E&P companies in the U.S. about, well, how are your break-even costs in your key play? How is that changing year over year, right? That's a great data point. But if it doesn't line up with what we're seeing, we'll say something different. But it's usually good quality data. They're speaking to the cooks who are in the kitchen, right? The ones who are actually allocating capital there. That's as an example. And so we do spend some time looking at all those as well, too. And I think it's important to say GLJ is an independent. We use our commodity price forecast in an important manner in how it translates volumes into cash flow, but it's not a source of revenue for us. We don't publish a price forecast and expect to get paid for that price forecast, right? It's a service we do for ourselves so that we can, do the business we do. So it allows us a level of independence, right? We're not trying to sell a book on the backs of it. It's an analysis that we just feel is important to get our reports for our clients done properly and correctly.
Speaking of clients, what is the best or most important value driver for your clients? What do you think they look towards?
I think they want to make sure that if they're going to work with GLJ, that you're technically competent. Obviously, they want to be able to speak about what activity and regions that they're working in with a counterparty that understands it all, right? They wouldn't want to re-educate you every year, for example. And so we take that very importantly. I think we spend a lot of time keeping our staff up to date on cutting edge drilling technologies, fracking technologies, for example, so that, we walk the walk with them, right? You just don't talk about it. You have the ability to get in there and do good analysis with them that opens their eyes as well. I think that's very important because that creates a relationship over the years that there's a shared level of understanding about their resources and their reserves. Independence is I'd say, cornerstone of a company like GLJ. So that, without a doubt, is something we protect really closely, right? We have to be able to speak independently on what we see and observe and report on that. So that has a lot of value to our clients as well, too.
Since you see so many assets, I don't know how this works, but do you ever give advice on company A and company B on certain deals? Is that allowed?
Yes, that happens. For sure it does. Sometimes we're hired to do that, actually, right? It's a part of our advisory service where company A might come at us and say, look, here's our suite of assets. We're finding them, a little bit tired or worn, and we're thinking of rationalizing some of them. What would make a good fit? And then we'll work pretty closely with company A to, optimize what they could sell and maybe target companies or assets that they should buy to give them a bit more of an optimal mix of assets going forward. So yeah, that does happen for sure. Working with a client now who is looking to acquire some assets, and they're having us do a bunch of preliminary work to kind of scope out what some areas might look like. They're a smaller shop, so they don't have all this in-house. Big companies, often would do that on their own behind closed doors. Not everyone has those resources, so they might look out to a company like us to, help provide that with them. So it does happen, yeah, most definitely.
Instead of an investment bank.
Instead of an investment bank. Yes. And ultimately, they may get to that point where maybe the investment bank is working on the other side, helping sell that asset, so they'll get involved also, but not always. Sometimes it could if it's just an asset deal, then it certainly wouldn't involve an investment bank, right? They would just call up company B and say, look, we're interested in your operations up in this area. Let's make a deal, either dollar or asset swap, and leave that at that. Yeah.
What's the biggest opportunity for GLJ right now?
Good timing you're asking that. We've been having those conversations internally. I think for us, the two biggest areas that we really have ability to grow are a little bit biased here, but I think we're pretty good at what we do. So taking what we do and doing more of it internationally is something that we've been focused on for the last 5 or 10 years, no question. The Canadian industry has been very good to us, but there's a lot of consolidation, right? The number of publicly listed E&P companies has dropped from something in the 300s back into the 100s. So we've got really good, strong clients, but it has created a bit of a flat plateau for the type of work we do here. So taking that work, but doing more of it internationally is a really strong business opportunity for GLJ. And we've been pretty successful with it, certain pockets of the world. Latin America is a real strength for us. Pockets in Europe has been very good for us. We're moving more now into, some Central and Eastern European blocks and down into Pakistan and India. And so we're having a lot of growth there, more so. So more of our general revenue is coming internationally now than I think at any point in our history. Yet we do it all out of Calgary, which is convenient because data has become so liquid lately, right? Data rooms and information so easily traded. But we do have boots on the ground in several places around the world, legal groups, engineering groups that kind of help manage meetings and clients in areas where we don't have a proper full office. But that would be the most obvious area of growth for us. And then beyond that is a little bit of expansion into, emerging energy. Like I mentioned earlier, geothermal. That's been a real great success story for us. We've developed a whole geothermal team here at GLJ. They'll work on geothermal heat, geothermal for energy, geothermal and lithium combined operations. Areas of the world that's very active, right? It's interesting. A lot of the technology and skills come from Canadian companies, but in Canada, geothermal doesn't make as much sense, right? Our geothermal gradients are good. They're not great, but you're also competing against relatively low cost electricity. That's not the case elsewhere in the world where electricity is very expensive and maybe they've got better geothermal gradients. It's a real growing area that we're interested in pursuing. An example is one we're working with an Australian company who has assets in Germany developing a combined geothermal lithium plant. And we've been working with them over the years, first as a technical consultant, helping them kind of sort through the problems, and now more on a reporting as a competent person style report that goes out to shareholders. So a couple examples there of where we're growing.
This episode is brought to you by Astro Oilfield Rentals. Distance can elevate risk, be it equipment failure, cash burn, or threats to your reputation. Astro Oilfield Rentals can help minimize those risks for you. With an impressive fleet of well-site trailers, cutting-edge communications equipment, expert technicians, and round-the-clock diagnostics, Astro ensures your remote operations stay productive from the U.S. border to the Arctic Circle. Astro Oilfield Rentals is there for you no matter the mile. Learn more at astrorentals.ca. Another job as CEO is to be good with people, which you are. And so at GLJ, how do you promote people within to make sure that you're getting creative ideas from within the company? How does that work?
Yeah, good question. And for us, it's more than just a slogan, but you can imagine in a consulting firm, we don't own hard assets. Our assets truly are our people. So we kid about that, right? Because it's a bit trite to say it.
Yeah.
But without a doubt, beyond our offices and some computers, it's our staff and our expertise. So we spend a lot of time trying to foster that, I would say. We hire a lot of junior staff, train them at GLJ. We've got very extensive training programs. We have a lot of pride in that and getting them knowledgeable to be able to do their job and interact with clients and learn more about it. And then how we treat our people, everything from, compensation down to, being shareholders in the company.
Yeah.
It's very important to us that we get that right. We have, forget the number, I should know them. I'll say 6 pillars or 5 pillars in the company. And one of them is people and culture. And we treat it like it's important. And part of that isn't just only internally facing because we're only based in Calgary. Calgary's our community, right? So we spend a lot of time out in the community, volunteering time, making donations to funds and foundations we care about, just taking part in other things that our clients do in the community as well too. Try to be a good community partner, I guess, if you will. And that fosters healthy employees as well too. Right. We have programs like if you're an employee and you want to go take part in a marathon and, raise some funds for it, we'll jump to the cause immediately. If it's something you're taking part in, we'll help take part in it. That's just part of our brand, I think, here.
So the last 10 years, Canadian energy equities have been depressed, which would suggest a higher discount rate on the reserves than what's usually used. In your opinion, have you pointed towards a number the last few years, like that's way higher than in the past to use?
Yeah, what you're saying is exactly right.
What are you thinking?
In the happier, frothier days when every company was growing, right? They were seeing valuations at full proved plus probable reserves were all valued. In many cases, their contingent resources had value. Nowadays, without giving a hard discount number, it's more like it's just what are you producing, right? They look at the current production numbers. What's your PDP reserve base? And for many companies, that's kind of all they're valued at, which is a real shame because they've got these great inventories behind them, but the market isn't really valuing them, right? So either you look at it one of two ways. Either they're being paid fully for their producing values or a higher discount rate on the unproduced values or non-producing values. And so the truth is probably somewhere in the middle, to be honest with you. But yeah, you see lots of cases where they're just not valued or at such a high discount rate that they're not valued much, 20%, 30%, which is a shame because they're very valid inventory and targets that will return value to these companies. But as you mentioned, the Canadian side is just not, it's not feeling the love in the last 5 years or more. Maybe it's changing. Right? Maybe it's changing. Some of it was self-induced. Like if you look at the energy industries from the decade of 2010 to 2020, we're paying back some of those sins, obviously, right? We're paying down debt. We're reducing, shareholder capital back to them. And so we're kind of regaining that trust, I think is what's happening with time. But they are, very lean companies. I had a conversation with a couple clients the other day who commented on Talisman, right? I wasn't really familiar with them too much, but, they had thousands of employees to manage the production base that they did. It's a fraction of that now in terms of staff count to manage a big company like Tourmaline and ARC and what have you, because they just become so efficient. They're very good at what they do. And so that should be reflected more in the stock prices and the valuation than what it is. If we'd had a period like we've kind of been living through with low AECO prices 10 years ago, there would have been a lot more blood in the streets than there are now. And now it's, it's painful and it's tough, but companies have just done such a good job at diversifying, where they're selling their gas, right? If we can't build LNG or enough of it on the West Coast, well, we'll access the U.S. volumes, right? And so actually bypassing all the midstreamers and going right to that is terrific, right? It's a great show of how a company can be sustainable through tough times, right? Just diversifying the market into the California and Dawn and Chicago. And it sure shows the value of a gas marketer in the big picture, because anyone who's really having to live through big exposure to AECO is having some tough times.
Yeah. And so that's the argument from OPEC is you cut prices to shake out North American producers, but North American producers have been resilient, just like we were saying.
That's right.
How do you think about that?
Well, it makes it interesting. And so, OPEC has a tough decision to make. Are they going to continue to down that path or just realize that the North American and Canadian producers are very ingenious in terms of how they remain resilient and find a way to cope and adapt? And then that it's not in the best picture just to flood the market and, push down prices for both sides. I think they have to view it as just a formidable competitor that they've got here in North America and find a better way to make it sustainable in the long run. Highest prices aren't really great either, because then the consumers become very resilient, right? And start to use less energy in various places and become more focused on conservation and efficiencies and things like that, which, may not help them in the long run either. So there's certainly a healthy band with which, I think OPEC, for example, wants to operate, and our markets can respond to that, in a positive manner as well, too. Canadian producers in particular, you think about the oil sands producers, have been extremely good at making economic resources that, wouldn't have been considered that way, even a couple decades ago. They've driven down operating costs to a terrific level that they're competitive on the world stage. I think it's a real feather in the cap of particularly Canadian industry on the heavy oil side to remain so competitive in, what would have been oil prices that were too low 10 or 20 years ago. But they've made a terrific business case for it now.
There are some heavy oil companies that have decades of inventory. Some would get up to even 80 or 90 years of reserves, depending on who you ask. But do you think there's even more than that we don't know about?
Well, those are real barrels. Like those are barrels we evaluate every year, and they're not the next barrel we're going to produce, but they're just as accessible in the long run 50 years from now as they are now. So those barrels absolutely exist. And because of perhaps in some cases reserve reporting requirements, we might cut things off at 50 years. Well, 51 still exists, 52 still exists. Yeah, we've been blessed with a resource that we have to, treat properly and develop responsibly. And it can be a terrific source of energy and wealth for our country for decades to come, many generations to come. And on that front, we haven't really spoke about CCUS much, but I think we see the resources there. We see they can get at it economically, so the safe supply, and the better we can become with producing those resources responsibly. And part of that could be, carbon capture and sequestration off of those oil sands projects. So largely what the Pathways Group is trying to do, then that's another, green check mark in the box, is that we start to produce barrels at a lower carbon intensity than we ever have in the long run as well. And then it just makes such a compelling case for Canadian energy that it's hard to argue against, to be honest with you. The only speed bump to that, of course, is it's not cheap, right? Capturing those CO2 tons and injecting them isn't a money-making proposition. So it has to be, to the benefit of the economy or industry or in the environment, but it will have to be incentivized or else it just won't happen on its own. But most companies, are trying to do the right thing for the right reason. And that's just another one that they're pursuing that I'm fully behind it. The technology isn't difficult. It's the sort of thing we've been doing for decades and decades. We know how to separate CO2 and H2S from gas streams. We've been doing it forever. We know how to inject that safely into horizons forever. It's just, the economics to do it, policy behind it, et cetera, has to get in line for it.
We don't have to do politics if you don't want to, but the tide seems to be shifting a little bit federally in Canada. If you were to put your finger on one project that may help the sector, or two or three, do you think there's any that stick out to you? Or is it just sentiment and support from the government that needs to change?
Well, I think there's a broad basket of projects that could make a big difference. I really do believe in that. I think Trans Mountain opening kind of shows us, reinforces, the industry knew, but I think it reinforces and shows the rest of the country a little bit what can happen when, you do kind of unleash the ability there a little bit. We're putting more barrels through. We've diversified the market extensively, right? We're selling a lot more barrels now to Asia than we were before. It's helped the domestic price significantly, which helps the producers, which in turn, of course, they all pay royalty and taxes. Like billions of dollars are being unlocked because of that single project. So, a secondary project like that, I think, should be given real merit. Now, whether that runs through a similar area, which I would kind of doubt, or more northern BC, or potentially through, Manitobas are being investigated as maybe another area to get oil to tidewater. I think something along that lines is significant. But again, as I mentioned, I think on the gas side, there's probably more immediate opportunity there for incremental LNG volumes. I really do think and hope that the second phase of LNG Canada will be FID'd. I can completely understand why the partners would wait until the first one's up and running, see how it's received, see what the market is. But again, there's just so much compelling reasons behind it happening in a second phase that I do sort of expect that to happen. Shell has said many, many positive things about it, right? Even as much as, well, look, the AECO price remains so low. This is such a compelling case for us, right? Like they're kind of foreshadowing a little bit of it, which would have a material impact. But we have the ability to supply significant LNG volumes for decades and decades. That's just such an untapped potential there that I think that that's probably where it should go next, or as a second phase there, development of incremental projects in Kitimat or Prince Rupert, other areas, that I think that is really substantial. And these are projects that we know how to do and get at them. You just have to get incentives aligned, right? I think the partnerships with First Nations have gone a long way towards that. Like look at the ability to get wood fiber and some of those other ones done with incentives in place that help all the parties involved. And maybe that's what it takes. Maybe there needs to be some provincial ownership through BC that makes sense for them, right? Sharing of royalties. Like there's just lots of ways they could go that might make those projects a little bit easier to happen and get developed. Part of the problem is our generation, and we've been blessed that a lot of that heavy lifting was done for us, right? Back in the 50s and the 60s. And we've inherited this infrastructure that just does so much for us, right? To the point where I kid about it. You ask a younger generation, where does, water, electricity, and food come from? They'll say the tap, the wall, and Sobeys, right? They forget about all the hard work that's been done to build that infrastructure in the past to get you your water and your food and your power. And we just need to get at that again. We need to have the spirit and the ability to construct these things that are completely doable. Like it's, we're not building a transnation railroad here, right? These are incremental projects that each one of them are important, but in aggregate make a huge difference to the prosperity of the country. And I do honestly think that, hopefully the new Canadian government, we started with politics, sees that and becomes much more practical with it, because for 10 years we didn't have that, right? They were more built on ideology than practicality. But at the end of the day, I like to kid, physics wins, right? And ultimately societies like ours need energy. Heck, that's what created us, right? Is the ability to have work done for you rather than just throwing another person on the project. And so that growth in energy in Canada is important, but really it's more around the world, right? We need to help nations that are energy starved enjoy the benefits of delivered affordable energy that we've got. Like I do truly think there's a case here on the backs of that, just to help out our other nations that aren't blessed with the same resources we're blessed with.
Yeah, reliable energy is the number one concern, even for Canadians. That's what we look to first, and cost effective.
Yeah.
Not to mention AI with the power demands that are coming up. It's a whole other subject.
That's a whole other subject. But again, that's what gives us faith. The natural gas that we've got in the ground right now has a huge demand in the future. That's just a tip of the iceberg there. But you're right. Like the three reasons for energy: it's got to be reliable, it's got to be affordable, and it's got to be clean. And it's got to be done in balance. Like a firm like GLJ helps our clients deliver that in balance. And we had a government, I'd say, who was a little bit out of balance. They were focused more on one of those three pillars for so long that you lose what true balance looks like. And it happened in Europe, right? They were so focused on green energy for a while, they forgot about the need for it to be affordable and available. But at some point, physics wins, right? You need to be affordable and available too. And so there's a balance in this equation that I think the world's awakening to a little bit more than they had been for a few years.
I really appreciate your time today. Maybe to get towards the end, if you were to leave investors in Canadian energy with a message from a very technical perspective, what might you tell them coming into the summer of 2025?
Yeah, I'm really hopeful for the industry. I am. I think we've done a great job of becoming, like I said, efficient machines that are very good at developing these resources, and the ability now to think a little bit larger and to grow that and to support a lot of Canadian development to export some of that technology resources to the world. I'm really optimistic about that. I think we've got an incredibly skilled workforce here in Calgary in Canada that can export knowledge as well. And I'm really optimistic about the future for that going forward.
Appreciate your time today.
You're very welcome. Great conversation. And then thank you for the invitation to do it.
Hello, listeners out there. Thanks for checking out the podcast. Hopefully the episode provided some insights. If you enjoyed the show, check out trose.ca where more episodes are yet to come. Until next time, happy coffee drinking.